I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to cover what I was hoping to cover in last night's video and the failure, which is all of the configuration from the dollar and what's going on with the treasuries. And I think there's something really significant there. Let's get into tonight's video. All right, folks, back to the old software. I failed 2 nights in a row trying to use the new software platform. So, I'm not going to make the same mistake 3 times. So welcome, and we'll get into tonight's video. One of the things that was disappointing about yesterday's failure was probably one of the better rants and better presentations I've done for a while. So evidently, it was not supposed to be revealed. That's how good it was. Anyway, a couple of things that I think that I've been watching. I mentioned it in the Substack last night. And by the way, if you don't get the Substack, please get it. It's kendallreport.substack.com. There's a free 7-day trial. But one of the things that is kind of a theme that's kind of unfolding here is, what's going on with the treasuries. They keep staying up in this upper band of the range that I've been talking about. And this appears to me to be a bit of an issue that's building here. And we're trading right around that 440. We printed up to 4.59 a couple of days ago, and the dollar's declining. There's definitely some things going on here. And one of the things, this is going to be kind of the in between the lines of what I was talking about in Substack last night, is really what we're looking at here from my viewpoint is there is definitely some in the background is some liquidation going on. The dollar's getting a bit weaker, although there's a sign that it might be bottoming right now, at least for a short term. And we're seeing the treasury staying elevated, still a lot of selling going into treasuries. And sometimes it's hard to remember that we still have QT going on. We forget that. While everybody's talking about the Fed lowering rates and doing all those things, we still have QT. So my expectation, I was thinking about this, we have a meeting in June again. I think the 17th, 18th of June is the next FOMC meeting. And I think they're going to continue this QT if they announce, this is, I think, rather than just looking for lower interest rates, if they announce the end of QT, a couple things will come into focus, at least for me, is that they are finally getting to the point where they're happy where the balance sheet is. And then as we come in, I think September, October meeting, and I think there's one in November as well, and they usually have one at the end of the year. But somewhere in October to November, I expect to see them lower rates, but I don't expect to see them lower rates anymore until they completely stop QT. So my signal will be watching for QT. But meanwhile, there's somebody bigger than the Fed selling the treasuries. And, you have to wonder, is it China sneaking out the back door a little bit? I don't think Japan is a big issue, but I do see this becoming a potential snag in the system. And I went down a little bit of this path in the Substack last night. But what I'm going to be watching for is how these treasuries, if we get some alignment, the dollar starts to firm up a little bit, and we see treasuries come back in probably into the 4.3, maybe even down to 4.2 range. That's going to be significant. So I just want to mention that because I really did a good presentation that no one heard last night, and so that was a difficult thing to go through last night. So I give up on the other software for right now. I won't put me or you folks that are looking to hear what I have to say in any more issues around that. As far as we still are just kind of meandering in this market. So let's talk a little bit on what's going on the macro level. This is like, I just noticed that I think going back around the 16th, I was talking about how the markets were starting to stall. Well, we've been climbing this little wall of worry for a better part of 2 weeks now, about eight trading sessions right now. And I noticed that some of the headlines are going, oh, we had 6 days up in a row. Well, the 6 days up in a row were these little small advances that were happening. Yes, they were up, but it sounds like the market was going up. And really what we've been doing is drifting sideways. And you'll see here in a few minutes what I'm starting to see is the algos are all starting to suggest, I've been talking about this multiple days, that I think that we're going to pull back at least to the 200-day moving average, test that, and possibly go a bit lower. I'll show you here in a minute when we go through the S&P. So we should be able to get through this show tonight fairly good. So it looks like everything's normal and flowing because I'm on the old software. That was so let's set this up just a little bit more. So we'll go through the database. It's usually done by 10 after, so that should be set to go. I'll check that in a minute before we move on. And we'll just go through the normal flow of S&P, NASDAQ, and so forth. And we'll go through gold. And I'll probably bring up the treasuries and the dollar tonight as well. So we'll do it in the, so we're going to do database, S&P, NASDAQ, and then we'll do the treasuries and then the dollar, gold, and Bitcoin. That'll be the plan for tonight. So let's go ahead and get into that next phase. Okay, so this is what I was talking about here. We just are climbing right along these moving averages and just kind of, and if we look at the last 6-8 sessions here, let's zoom in on that. We literally have, going back, we got an RTX sell signal, which usually suggests that we get 1 or 2 days sideways. We've got this upward, like I said, we did get higher closes here, but they're not, it's not like there's this big expanding trend. And now we see the market grid is turned down, so we're starting to form a little bit of a channel here. And I think as we let me bring up and draw in a couple patterns here that I think are going to be significant to keep an eye on here as we go forward. But we should start to see the market grid start to come down and channel toward this 200-day moving average, which is coming across right here. And there's something else here. I'll take all these lines and zoom in here. But right here is a major pivot number, which is 56.57. So 56.57 is the key there to watch for, and that could be the big pivot. I don't know that we're going to be able to go that low in this pattern, but for sure we should come down into the right here. I'll draw one more thing here. We've got this 21-day moving average coming in here. So let me clean this up a little bit. And this is most likely what's going to happen is we're going to see the market start to come under the 10 and come up into this wedge, which is right at the 200-day moving average. That's what we should see come in at from that standpoint. So let me also, as we zoom in a bit and we look at, you can see all the algos are starting to, PPM 1 and 2 are starting to show a downtrend, but it's another 2 days. Right now we're at a 0.59. I've run the data sheets for the S&P. I'll show you. It's still got a bullish mode because we're sitting here right now with PPM 1 at 0.52. And PPM 2 is at plus 0.53. So that we're ways away from, I think, breaking. We're going to stay above that 10-day moving average. So we're looking at, this was Tuesday, as we're coming Wednesday, Thursday, we're probably going, that's going to be at least the probably buy the dip number from that standpoint. All right, so let's go to that data sheet here real quick. So this is the data sheet, still 85% bullish, and the reason for that is what I was just showing you, is that PPM, you can see here, it's discussing in the key insights, it's telling us that PPM 1 and 2 are a point, above that at that 0.52 number. Volatility is still contracting a little bit, so low to moderate, approaching PPM 3 and PPM 200 are actually lagging, but that's typical within this pattern. So let's just go into over here where we're looking at the target. So here's the target range for today. We're looking at 59.61, 59.35. That's R1, S1. Those are the high percentage. We could expand down to 59.20, and on the upside, 59.76. So look for, as we're going through the session overnight and coming into the U.S. session tomorrow, we should see us stay maximum. We'll even hit an R2 or an S2 range that will expand the volatility. And I don't expect to see us excuse me. Yeah, I don't expect to see us to get through that. To get through that S2 R2 level, I don't see an expansion beyond that level at this time. So as we're looking at the patterns here from what's unfolding, is that upward wedge that is unfolding here is really pretty typical right before a decline. And I think this is probably me calling yelling wolf like multiple times, but we just keep crawling up along this line. Finally, like I said, it looks like maybe Thursday that could happen. When we get to this type of pattern, we could come down. So let me just go back to the chart here for a second, and the 10-day moving average is at the moment at 58.81, and the STX is 58.82. So if we went to STX today, that would put us right on the 10-period moving average. That's going to be a buy the dip trade because we've got these strong PPMs. So it's definitely going to be still be buy the dip trades for the next couple of days. We saw a bit of recovery today. We were down 40 handles, and it rallied about 20 off of a couple key bounce points today. It was actually some pretty good trades off of some of these levels. But it looks like the buy the dip is probably going to hang around for at least another day, maybe two, and then as we come into the end of the week, maybe we can see some backfilling here from that standpoint. So it's interesting. I went right into the S&P and didn't go to the database like I told you, right? So let's go take a quick look at the database here and just kind of segue back over here. So let's go and see what we've got here. Let me move over to the daily, and I'll zoom in so we can all see it. So we're still at 72%, 70.72% on that level. If we come in here and we look at the all stats page, we'll look, and we got about 240, we'll call it 250 buys, and we got about 130 sell orders. So basically, we're doing that rotation thing I talk about. 70%, very respectable. That's going to keep everything really positive here. Like I said, the buy the dip trade could be on for the rest of the week, and there is, because of the bullishness in the patterns, it'd be very easy to blow up to the upside yet. There's still a lot of things going on here. So database basically is confirming what we were just talking about on the S&P here. So the pattern just kind of continues to crawl up. I still think if we did get some kind of surge and print into an all-time new high, which from where we are right now would be easy to do. I think the high we've tracked this down a couple of times, but I'm just trying to find. I believe it's right here. Yeah, six, a little bit over us. Let me get the number here. Sorry about that. Yeah, so we're looking at 61.82. So literally a couple hundred points, and we've seen we could easily get that type of a move in a couple of days. So we could print a new high. If it happens, I still think you get a big rejection off of that level. I'm not sure you're going to be able to find another bagman to buy above the new highs unless there's some kind of spectacular, there's a deal with China, it's in writing already and everything's wonderful. I don't think we can count on that right now. I think it's, like I said, I've been probably one of the more frustrated people with the handling of the tariffs and the deals and everything that's happened. It just kind of continues to be a bit of a muddy kind of presentation, not impressive at all. Scott Bassett is a pretty steady kind of neutral kind of emotion guy, but we're still just, I'm still kind of in the Jerry Maguire stage, show me the money. So, all right, so let's go ahead and I'm going to bring up the weekly chart for just a second here, because this also illustrates where it's forecasting that we're probably going to get some backfilling in a week, but the overall pattern on the short term, and I talked about this the other night, as that we've got more bullish expectations as we come all the way into the first week of June. We're not seeing the acceleration on any of the other PPM, so that just tells us that we're still get that upward bias. We could, if we close higher this week, which we probably, I expect we will, but if we don't, if we see the market grid turn down, then that could be the setup for some consolidation, that move to the 200 day. All of that should be where we end up setting up from that standpoint. So there's still a lot of work. There's no collapse coming. I think we're just stalling here and trying to consolidate some of these gains. And I would like to see a reasonable pullback, just to kind of set the tone and maybe set like a right shoulder. The most preferred would be to come back into like a 55 handle, which doesn't seem very possible at the moment. We're going to be tied into some of these moving averages that are just kind of hanging around here. So, but there's at the moment, there's a term that I've used once. It was an old term from floor trading days. That there's no VIG in the market, so there's no real strong volatility. The numbers on the indicators are saying, hey, we're solid uptrend, but we're not seeing any kind of action right now, because there's literally nothing that the market can seem to key off of. The news cycle that we're in right now is fairly benign, I would call it. So, all right, so let's go ahead, and I'm going to stay on the weekly chart. And I do want to point out something, and I'm going to bring this up here, is I'm not sure we've got some new Fibonacci targets that have popped up on the NASDAQ, and this is on a weekly chart. Let me bring those up. High target 21,476. Let me bring that up. 21,428, 23,326, and 24,500. I'm just going to round that off. So these are definitely new highs. This would be a moonshot to go straight up like this V bottom. So maybe that's what, maybe the NASDAQ, which has led the way most of the time, maybe it's setting up the V bottom and we're just moonshotting all the way up into these levels. I still think up in this, there's no oxygen up here. I think that the market, if it does make a new high, it responds from there. It looks like the high was right here at 22,529. So that fib target 1 would be the perfect rejection point if we just continue to go up here. It's an interesting pattern. It kind of almost emphasizes how overstated everything got down here when we printed almost down to the 200-week moving average. This is more than impressive, and we're seeing a couple things happen here. We got the database back at basically 42% on the intermediate, so that tells us we've got stability and foundation in the markets. And then the short-term database is printing up at 70%. And as long as it stays above 58.62, there's still going to be a really solid foundation both on the short term and on the intermediate. So, like I said, no big declines. It would be the red dots. And by the way, I mentioned this the other night, but I changed the SMA period to 3. It seems to do a little better projecting the next couple bars out than the 1 did. So I've kind of adjusted that number. So if you have the indicators, then you should definitely go and change that to 3. And I've got, you can change the thickness however you want to see it, but it's still at a coefficient at 150. Future bars, I've got 8 out, and then past bar increment of 3. So leave those settings, something like that will give you these results that we're seeing here. But that's still projecting here that everything's going to soften out, come back to the ultimately around the 10-week moving average, something like that. But we're looking where my cursor is right now on this weekly chart is July. So this could take a while to kind of flatten out. And that may be the scenario we're looking at. I'm not expecting a straight moonshot up to these numbers on this fib, but the probabilities are there at some level. I don't think it's very high, but definitely we have a big uptrend. So let's look at the weekly. I just want to do a quick bar count. Yeah, so also next week will be 8 weeks off the low, if you can believe 2 months that went by. That's also going to be kind of an 8, maybe we'll get somewhere like an 8.35 or an 8.5, and then 8.55 bar pattern. So typically around 8 bars, we'll get a pullback, and then we'll be forecasting pretty much what you're seeing here on the red dot. So let's go to the daily. And the same as with the S&P, the short term is everything's kind of rolling down where the momentum's losing momentum. But just the fact that these indicators are going down does not mean the market's going to go down. It just means that on the first one, that the 10-day moving, or this is daily, 10-day moving average is becoming susceptible to be penetrated. That value right now, just to bring that up, is 21,108. We'll call it 2,100. If we get through that, then you're looking at that pullback to the 21 and the 200, which are very similar values at this point. All right, so let's go ahead and let's go to the Dow next. The Dow on the short term still has some downward movement. I think that one of the things that I tried to talk about last night when my software failed was that we're really looking at the Dow coming down just a bit more. I'll show you the weekly chart because that's where the real context is here. And matter of fact, I'll go through the whole thing. We're going to go daily, weekly, monthly. but we're seeing potential V bottom coming in next Monday or so, Monday, Tuesday next week, but we should drift down. And I think the selling in the Dow is directly related to the movements that we're seeing in the Treasury. So we'll go through this pretty quick. So let's take a look at, this is the one chart that actually has a reasonably positive configuration where we're seeing this rolling bottom. We're seeing that PPM1 is being forecast to go up a bit, but we have this big 21 coming down here. So that 200, we're below the 200 week, but right here at this number, 101 and a half, 102 is probably where the Dow will stall. And then I think we get a reversal. Maybe we retest the lows coming down. So let's go to the monthly, and I should be able to tie this all together for you. So this is an interesting pattern that I think that we need to recognize. And I would argue a couple things. We're going to go back a ways here, but if we look at the Dow, this is potentially a big distribution top that suggesting that we could come all the way down to around 92, possibly 90. I'm going to zoom way out here. Because I want you to have a perspective that's basically the beginning of right here, this big rally in the Dow. Let me get off page here. This big rally in the Dow was basically, I started in the markets in 1979. So right here is with the Dow. That's one of the first things I remember. We were trading French francs, and there was no euro Dow then, and we were trading all the currencies, and they were getting murdered. The Dow was just screaming, and then it came down as fast as it went up. And why was that happening? That was happening because the treasuries were on their way to printing, the 30-year treasuries on its way to printing 16.5%. And the Fed funds were at 20 with a 4% surcharge on it. So this was interest rates going up. Everybody was buying the Dow because they wanted that interest rate. And but then we see this collapse. And the reason why we've got this kind of downward sloping trend. And what I want to show you here is this is the distribution that I was talking about. If we start to look at it, I talk a lot about when you're using, these are the dots are the projected moving averages going forward. And what it's telling us is we're going to be in a downtrend, and we come over here. Let me just get this value here. We come over here where this is 90, 95, and then 90 is coming down below this. So we may end up around 95 on the Dow. But this is a very big distribution top that we're looking at. And we had the configuration, if we look at this previous, you can see where my cursor is, the previous, we had this new high, and then we got this big ABCX, ABC, and then we get this pattern up. Now this one, we got a big divergence. We didn't make a new high on the Dow here, and I think the Dow is going to be under pressure. And let me zoom out so we can get to the year. If I come out to this wedge, this is 2028 where my cursor is right now. So this is a long-term trend. It looks like the Dow is going to be kind of under pressure for a while. So this is the thing I'm going to try to, this was something I was talking about in last night's video that none of you got to hear, is if the scenario of what I'm showing you here is the case, and I'm going to show you we're going to go to the treasuries next, and I'll tie this together. What we're looking at here is the potential of pretty much everything that the Trump administration is doing is probably failing, and that there's going to be potential trade wars, interest rates soaring, all kinds of chaos. That's, believe it or not, just going down to this 95 is a disastrous scenario, I think. And there's a big argument that this is a possibility. So I'm going to throw a little bit of water, be a little bit of a wet blanket. But if we look at the PPMs and the forecast, now this is a monthly chart. So this is out years. If I go all the way to this forecast out here, it's 2029. Okay. So we're way out, but this is forecasting that the Dow is going to be where it's at or lower. And I don't see anything changing that. Now, when we got to the worst of the worst was after the, GFC in 2008 and 9. This is over here at 68 on the dollar. So this would be somewhat of a crisis. There was something I talked about in the past where sometimes the discounting dollar is actually bullish for equities. It depends on the cycle we're in. I don't have a handle on that just yet, but I do expect that this is going to be a downward slope. So now let's go to the treasuries. I'm going to stay on, at the moment, I'm going to stay here on the monthly chart, okay? So this is where it gets interesting for me. And these seem, this does not look like a distribution top. We've still got some upward slope here. This looks like more of a flag where we would have, let me draw this on. So I don't want to make any mistakes here. All right. So the argument would be, and I'm just going to draw in the numbers, that this is like a 1, 2, 3 pattern. Let me get off the screen. Sorry, I have to close the. All right, let's try it again. All right, so now what we're looking at, so we have 1, 2, 3 here. This would be the argument. This is kind of an A, B, C, X, A, B, C pattern, and a basic wedge type. And then we get these Fibonacci targets up here. Those targets are 535, 601, and 6.42% on the 10-year. So this is very, very big, and this would be bear with me while I just clean this up just a little bit. So then this would be probably, some kind of final fifth wave here. So this little breakdown here, this would be a 5. So what we end up with is this becomes, I think that this right here becomes the flag before we go into the next level. So all right, I just want to come back up after going through that. This is important because there's not a confirmation yet that this is going to happen, but these patterns exist, and I've told you folks for years on this channel, you have to see these type of things and then see if there's any fundamentals. Is there anything that could bring this forward and this be reality? And the answer is, yeah. If everything fails, the rebalancing of the world doesn't happen, and the world rejects everything, and we start to see trade wars, we could easily see this kind of print on both the Dower and on the treasuries. Okay, so we could see interest rates increase substantially, and this would be the scenario. So this is almost like a zero hedge article I'm doing right now, which the probabilities of this coming out right now I think are fairly low, but this is on my radar screen of something that's likely to happen. I haven't seen anything set up quite as cleanly as this for a while. And for me, this is a big warning. So we're going to have to watch what goes on with all of the trade wars and all this stuff. There could be something really significant here. And it would be nice, and I've said this before, that I think that at the moment, the Trump administration, with all these capital investments, have ace in their pocket, so to speak. But that doesn't mean all this is going to work out well. So when I see these kind of scenarios, I tried to reverse engineer like I tell you to do and try to get to the point where what could happen? Is there anything out there? And I would argue that if everything that is being presented to us right now it fails, this would be the outcome. And it's kind of set up pretty cleanly. I haven't seen anything like this for a while. And what's interesting about it, though, on this whole scenario, I'm not seeing there's a conflict between what the equities are kind of their long-term formation is saying versus the bonds and the currency. So, I'm trying to still put this puzzle together. I was trying to decide, do I present this or not? But I think it needs to be out there to think about, because if things start to go wrong, we're going to be able to validate this sometime possibly by year end. So it's out there now. It's on the internet, so people can yell at me, tell me I'm wrong or right, whatever. It doesn't matter. I need to present these patterns because these are things that my entire career is, when I see this, it's like amazing when I see the alignment. The only thing that is not mapping out right now, you would expect to see an equity hit, a fairly substantial equity. I'm still putting the puzzle together, but you folks have it now, so that's good. All right, so let's transition from here, and let's do gold. This might be kind of an interesting place to go as well, as gold still has an upward trajectory into into 27, and the moving averages are being forecasted for just trying to get a value here. Yeah, they're being forecasted out to be around 3,700. So I would expect that we're probably looking. I thought there was some longer term projections here. Let me go to a weekly. I think there is something out there. Yeah. So weekly is putting out 3,800, but we can see 3,842 plus on gold. Let's look at I think where we are right now on a weekly. I think we've topped out for the moment in gold, but we're going to be able to stay above these patterns here. Let me just pull this around. Yeah, so you can see the collapsing of the market grid, but we still have these dots are the projections of where the moving averages are going to go. So interesting, kind of an interesting setup here, folks, from my viewpoint. I'm just, this is what I was trying to do last night. This is kind of a rehashing of that. I talked about it in the Substack, so I tried to cover it best I can. I put a fully free version for everybody to see out there. So sign up for at least the free version of Substack. So it's kendallreport.substack.com. Get the free version. I'd probably do 1 to 3 1 to 2 free versions every week, so you'll get some insights. But the patterns that we're seeing here are there's a lot of alignment in gold being a player and all of that. So the final play here, we'll tie in Bitcoin. Yeah, so let me see here. Yeah, I'm getting through this pretty good tonight. So Bitcoin continues to be just hovering right here. We're high 107,340. We still have, this is a weekly chart of Bitcoin. And those of you that noticed on a Substack last night, I ran the data sheets on a weekly basis for the dollar, gold, and Bitcoin. And I did dailies for the S&P and the NASDAQ. Okay, so I added the dollar in last night just to bring in some of this flavor, so I'm able to unpack it a little bit more tonight. But all of these, it's interesting because Bitcoin is at a point, we're right at that 109,000 number. If we break above that, there's it was in the data sheets last night. If you got the Substack, there's targets up at 121, 121,000, 136, 134. I don't have the numbers right in front of me, but those are valid projections for Bitcoin to go. So think about what I just talked about. We got the potential of interest rates spiking, the dollar going down. We've got gold still in that upward pattern, and we got Bitcoin poised to potentially just surge here to the 121 plus number, we'll just say for the moment. So all of the assets and different categories you'd expect to be aligned appear to be, like I said, the only thing that's out of alignment, but I'm not sure that matters, is the equities from this scenario. So that's going to be the primary thing I wanted to get through today. So let me look and see what kind of comments you folks have had. It's nice to have like a clean stream. Sometimes what do they say? When it's not broken, don't try to fix it. Yeah, I'm just looking at some comments here, folks, so bear with me. Yeah, I'm just looking at a comment by Earth Cruiser. Can you provide some deeper context and to speak of the scale of money that flowed into the NASDAQ and bounced off? Yeah. Yeah, maybe DXY could go to 80. No doubt. I mean, that upward 200 month is going to, that could be a longer term projection. Absolutely. I have no argument against that. Yeah, just looking here, I'm looking back on some comments, so bear with me for just a second. Yeah, so I'm glad I saw that. The downgrade was about as bogus. The downgrade should have been done 3 years ago, not today. The actual ratios have changed for more positive than they were 3 years ago. There was a 7% was out of ratio. I talked about that in the Substack last night. So yeah, I mean Moody's who? It's like the rating agencies lost all of their credibility back in 2008. No one really pays attention. That's why the market yawned when it came out. It really isn't a thing. However, having said what I've said tonight, there is certainly evidence that there's issues there. I just have kind of a pushback. It was almost like Moody's and Reuters and all these guys are just anti-American stuff. Reuters is the British, and Moody's. Like I said, I don't even know who those guys are. but like I said, they all lost their credibility on the GFC because none of them were downgrading stuff. You could watch, the one probably really accurate thing on the Big Short movie was the Moody's, how they didn't change their ratings. So, but yeah, so I think I covered everything really good tonight. I apologize for the last couple of nights. Some of the night before last was so broken it was ridiculous. I just took it off the channel. So we look like we're in pretty good shape here. Yeah. So was that institutional money, overseas money, Japanese, Saudi? I don't know. I think. Um, yeah. I'm just looking at some of the comments down below here. Yeah. Um, Liberal Bloomberg DNC rating. Yeah, that's the other thing. Let's talk about the CBO. This Congress. These people are a joke. I don't listen. I don't know what happens if they get the tax bill, uh, inked. There seems to be the typical showboating around Congress, and this is an opportunity for people that you don't even know their name to come in and be relevant because they're not voting for it. A lot of this stuff is just showboating and trying to posture and get some attention when normally you can't. So the best way to get attention right now is to vote, to say you're not for it, it's not there, and you get on camera. And that makes these guys, there's a lot of posturing that goes around in Congress. We know that. It's it's going to get, I think, really, really interesting when, like I said, when I see these patterns aligning like they are, it's kind of a scary scenario that I talked about tonight. But this also, we were looking at monthly charts. So let me just bring in 1 ounce of context here. Is these are things that aren't going to happen tomorrow. Okay. So equity markets can go up. A lot of things will continue to function. This is more like watching paint dry. And we're looking at a lot of the forward-looking things that I talked about tonight are 27, 28, 29. They're years ahead. So while this may all happen, I don't see the collapse and the implosion. So there's going to be a lot of things that are going to come into view, and things can change. And if the inverse is correct and none of this comes together, that means the trade rebalancing of trade and a lot of things that you see now actually worked out. So we could stay sideways stable. We don't have to do a moonshot because they happen, but we don't also have to, as we get more bars on all of these projections and this machine learning that's being applied, those values are going to move around a lot between now and 2029. And so as we come into the end of this year, we come into 26, start to see how things flow there. There's a whole lot, because I think that we're probably looking at the evolution of a major change that's happening in configuration of how the planet's going to work, but that's going to take decades to come together from that standpoint. That's at least my view. Yeah, someone's asked me to guess. I don't guess. The configuration on everything says that we are going to move. Bitcoin is probably going to move towards that high, but I keep advertising. I've used a couple of Substack headers on this, is that we're at a historical moment in Bitcoin. If it does not, if it goes above 109 and it flips and it gets rejected, goes back under 100, then that's going to be a moment that you will remember for a while. So all of these things that I talked about tonight are, speculation. When you start to look out into the future that far, There's a lot of things between now and then that can happen. But for right now, when I see these chart patterns, that's why I'm saying we have to watch what happens. So we have this forecast, and we're going to have to watch incrementally, what happens here. I think that if these transactions and this capital investment flows in and happens, that could change some of the dynamics of what I just talked about. So I'm not predicting these things are happening. I'm showing you what the algos are saying right now and what the scenario would have to be to make that happen. So make sure you keep that context when you understand what I'm saying. He didn't just predict all this is going to happen. These are the events. So here's what the technicals and quantitative is telling us. What would have to happen to make that happen? That's one of the scenarios that would have to happen. What we'll find out whether the trade reconfiguration works and whether all these new deals come to the U.S. and that everything gets kind of rebalanced. We're going to find out over the next couple of years whether that's what happens or not. If those things happen, then I suspect we'll see some different patterns emerge, and you'll look at the big distribution pattern that I talked about in the Dower. A lower Dower isn't the end of the world. The Dower going to zero is the end of the world, but not a lower Dower. So somebody said it might go to 80. It could go to 80, but 95 is going to be pretty solid. 90 is going to be probably rock bottom, at least in the foreseeable future, 26 all the way out to 27. That will be it. And, we'll see what happens from there. Okay, folks, I managed to, we're only at 51 minutes, so it's nice to have my dashboard. I can see everybody. I can see what's going on. So anyway, we're going to call it quits. I appreciate everybody that is here tonight watching, and thanks for your patience over the last couple of days, because it's been, if you think it was frustrating for you, it was crazy for me. So anyway, we'll see you all tomorrow, same time, same station. Hit the Substack, subscribe, hit the like, do all that. It's all free. The Substack is $8 a month, kendallreport.substack.com. See you all soon.